Hey, what's up guys, it's France here. Welcome back to the channel. In this video, we're going to talk about crypto taxes, especially given the fact that most of us will be filing our taxes sometime in the next few months. Now, I know I am based out of the United States and a lot of my subscribers are Americans, but a lot of you are also based outside the US. Maybe some of you are from the UK, Canada, Australia, New Zealand, and even some other countries. So definitely this video, for the most part, will be beneficial to most of the first world countries out there because generally speaking, most of you will have the same tax principles as the US. You may have different tax forms that you call. You may have different tax rates, but generally speaking, the tax principles between trading between crypto to crypto will be generally the same. Now, again, I am not your tax advisor. Definitely consult your own tax accountant before following any advice that I give you in this video. Now, again, in this video, I'm going to tell you the tax software that I love to use, which makes my life a lot easier. I spend 80% of my transactions using CeFi platforms like Coinbase, CelsiusCrypto.com, BlockFi, and things like that. So there's a tax software that I use which makes my life a lot easier. I can just easily plug it in that software and it spits out my capital gains and stuff like that. And also make sure to stay at the very end of the video. I'm going to talk about at a very high level DeFi transactions. Now, for this tax software, unfortunately, I don't really trust it with regards to DeFi transactions. And I would say about 10% of my transactions were in DeFi. So I want to talk about that in this video. If you engage in DeFi, get an airdrop, if you provided liquidity, if you took out a loan, things like that. So we're going to talk about that at the very end of the video. So definitely stay tuned until the very end of the video to get a very comprehensive guide on how I plan to deal with 2021 taxes. All right, before we get started, I would definitely appreciate it if you guys give me a thumbs up below. It really helps with the YouTube algorithm. Subscribe to my channel if you haven't already. We're almost at 10K subs, and hit the notification bell so you get notified when I post my next video. All right, let's get started. All right, so first things first, let me show you guys the tax software that I use. I personally like to use TaxBit. Now, again, there are many tax softwares out there that you guys can use, but personally speaking, for me, I believe that TaxBit has been a lifesaver with regards to automating my transactions and the ease of use when it comes to the user. So again, TaxBit will be my software. Again, if you live in any other countries besides the US, look up to see if TaxBit supports your country. So definitely step number one, look that up first. But again, for my American subscribers out there, TaxBit should work for you. Now, I know TaxBit for the most part runs globally, but again, you have to look up if your country is supported by TaxBit. Now, for TaxBit, again, I am not sponsored by them, but if you use my referral link down below, you get 10% off any plans that you choose. Now, let's talk about the plans. I personally use this plan right here, $175 per year. And it does make sense, like especially given the fact that my portfolio is large enough with regards to all the things that they support for this plan. If your portfolio is less than 10K, I would probably suggest that you use this $50 per year when it comes to your tax software. But if your portfolio is getting really large, if you anticipate it to become six figures, if you're really close to six figures, then again, not financial advice, but I would suggest that you use this software at $175 per year. Again, you get 10% off. So if you use my code, you only pay 45 here and 10% off of 175, it's going to be 150 something. If you use my referral link down below, I would definitely appreciate that. All right, so let's talk about the software. So one thing that I like about this 175 plan is number one, they have a tax optimizer. They have portfolio performance. It shows you the capital gains in real time, and also loss harvesting, which we'll talk about later in this video. All right, first of all, let's talk about the feature that all plans have, which is going to be automating crypto transactions. Again, that's not assuming DeFi transactions. So if you've made any transactions in the DeFi platforms such as Uniswap, or maybe you became a liquidity provider, I'm going to say that for the very end of the video. Personally, for me, that's going to have to be calculated manually. So if most of your transactions are in CeFi, like Celsius, BlockFi, Coinbase, Nexo, things like that, that can be done using the software, which I will talk about right now. With regards to connecting your exchanges, TaxBit does support a lot of DeFi protocols, which we'll go over now once this thing loads. Let me just wait for this thing to load. So as you guys can see, most of my old transactions transactions back in 2020, 2019. A lot of that TaxBit couldn't support, but 2021, if you need help filing your taxes using a tax software, TaxBit does support majority of exchanges. Now, I've been using TaxBit for a couple of years now. So back then in 2019, they really didn't support a lot of these transactions, such as Bittrex, Crypto.com. So most of my transactions from back in the day in 2019, 2020, I had to upload manually. But I would say that for the most part, you shouldn't have to do that, especially for 2021 tax filing. Now, again, these are the exchanges that I've been using throughout my years in crypto: Gemini, Coinbase, Binance, Celsius Network, Coinbase Pro, Bitfinex, and Bittrex. Now, again, I don't really use Binance, Bittrex, and Bitfinex nowadays, but I still like to connect these software so I can easily look at my transactions from over the years. Now, this tab is going to be the tab that's going to be the most important. Again, think about all the crypto exchanges that you've used all the way from the past. Even if it was in 2017, you use a crypto exchange and you don't use it anymore, it's really good idea to plug that in to the system, just so the system can know the cost basis. Because if you only use a crypto exchange, let's say for 1 year, 2017, and you don't plug it in 2021, it might not know the exact cost basis of your token. So maybe you bought Bitcoin from an exchange in Bitfinex back in the days, and then you only plug in your Coinbase software just because you've only been using Coinbase in 2021. The system's not going to know your cost basis because your cost basis came from Bitfinex. So with that, you will have to connect all of the crypto exchanges that you've used from the very beginning that you were in crypto. So again, you can just look up your exchange. So Bitfinex, look that up. It's not here. So Bitfinex will have to be uploaded manually. So with that, you have to click on this tab here, import CSV, and upload, or you can upload a generic CSV. Now let's see if Bitfinex is actually here, because I actually used to use Bitfinex back in the day, before all the fraud stuff that they've been doing. So yeah, unfortunately, Bitfinex is not here. So you're going to have to upload a generic CSV. Again, they have tutorials on how to do this, or if you want to upload a manual transaction on how to do that. If it's only one or two, you can do it manually. But if it's multiple transactions, you'll have to go to Bitfinex, print out a report from 2017, and then upload a generic CSV so that you can upload it here. Okay, so again, you can look up all the exchanges that I've used. Let's see, like FTX. Yep, FTX is here. As you guys can see here, most major exchanges are here, especially 2021 exchanges. They should all be here. Crypto.com is right there. BlockFi is right there. FTX. Let's look at Kraken. Yep, Kraken is there. What else is the major ones? Bittrex. Where are you, Bittrex? Okay, so Bittrex is not here. If you guys use Bittrex, you will have to upload that manually. Coinbase is there. Coinbase Pro. Even Celsius Network. Celsius Network should be here. As you guys can see here, Celsius Network is here. I was able to upload that using the API. So most exchanges should be here on the Add Exchange, and then all you got to do is copy and paste the API from that exchange into TaxBit. Now, BlockFi was fairly easy. All I had to do was log in using my username, password, and then BlockFi and TaxBit are now linked. So again, very easy. As soon as you do that, you can sync all of your transactions. The system's gonna calculate all your capital gains, all your capital losses, all your income, and things like that. So very easy to upload all your exchanges here in TaxBit. And if the exchanges are supported by TaxBit, you can always upload a manual CSV. All right, now before we talk about DeFi transactions and all the complications of DeFi transactions, let's actually first take a look at why I like this middle plan compared to this basic plan. And that is because of, number one, the tax optimizer, number two, the loss harvesting, and number three, portfolio performance. Now again, the DeFi beta, I don't really trust that. Again, guys, like you can technically add a wallet here. You can add a MetaMask wallet, you can add an Ethereum wallet, and then it can see all your DeFi transactions, but I would not trust that. Personally speaking, for me, all my DeFi transactions I manually calculate, which I'll show you at the very end of the video, so definitely stay tuned for that. Now let's talk about the middle plan here, the tax optimizer, loss harvesting, and portfolio performance. So number one is going to be the portfolio performance. So as you guys can see here, once this loads, at the very beginning, even right now, I already know that I've triggered $40,000 in terms of my capital gains already, because I traded, most of you that watched my last video, I sold my Bitcoin and a bunch of little tokens here and there, and I triggered about $40,000 in capital gains tax with that. So I already know that. So I'm trying to keep my capital gains tax below the threshold where I only pay 15% capital gains instead of 20%. So I believe the threshold is roughly around $400,000 for that. So I'm hoping that I sell less than 400,000. So now I know based on this software that I've triggered 40 grand of capital gains, and I only have roughly 360 grand to go on capital gains before triggering the 20% tax. So I definitely want to save some few percentage points, 5 percentage points, and only trigger below the threshold, which again, I don't have from the top of my head, but it's roughly around $400,000 of capital gains tax. After that, you pay 20%, but before that, you only pay 15%. Again, these are for my American subscribers. So number one is going to be the portfolio ROI. I like that for the middle plan because it gives you that. And number two is going to be the tax optimizer, which number one, you can look at tax harvesting. And then number two, you can look at optimizing your tax. Okay, so let's take a look at what I am talking about. So let's go here. So my Ethereum, because this is going to be a pretty significant portion of my portfolio. So if we take a look here at the tax optimizer and we expand this. So being an American, and most of you that live in first world countries, most of these rules will apply. So essentially, if you sell your crypto after 1 year, you know that you pay a lower tax rate. Now, again, these are for Americans, but also apply in most first world countries out there. So again, all these 2019 transactions here, 2020 transactions, it's been well over a year now. So I know I'm going to pay the lower tax rate for these transactions. So I'm going to take a look to see the first major big transactions that I had. So as you guys can see here, back in September 2020, I bought Ethereum, 39 Ethereum for roughly 17 grand. So that's a major transaction right there. So it's been well over a year now. So I'm going to pay the 15-20% tax rate with regards to this. So, you know, we can definitely keep going here to see my next major transaction. Another one here in September 1st, 2020, I bought about 13 grand worth of Ethereum. I'm going to pay long-term capital gains tax there. So that's very good. Now, if we take a look to see my recent transactions, the transactions where I don't really want to sell because of short-term capital gains, it's going to be almost double with short-term capital gains. We can see that my latest biggest transaction, if we were to take a look, is going to be this $28,000 Ethereum right here. I bought for 28K. That was triggered on September 2021. So technically speaking, I would have to wait until after September 2021 to trigger long-term capital gains. Again, given the fact that Ethereum 2.0 will launch sometime in the summer, most likely speaking, the crypto peak for Ethereum is going to be sometime in the summer, and from what I believe. Now, again, if we get lucky and Ethereum peaks after September, that's good. It means that I only pay long-term capital gains tax. Now, let's take a look. I believe that Ethereum will peak roughly sometime around May or June, given the fact that Ethereum 2.0 will launch in that date. So here's one transaction that's fairly large, which I triggered back in April 2021. That will be long-term capital gains if I wait until April 2022. So that's good because I believe that Ethereum will at least take until June 2022 to peak. So this one I can sell fairly easily in June if I just wait for Ethereum to peak then. All right, so that's step number one, is going to be tax optimizer. I know exactly when to sell majority of my bags because of this tax optimizer. All right, so step number two is going to be the tax loss harvesting. So let's take a look to see an example there. Maybe let's take a look at my Cardano bags. If I can find Cardano, let me just search that. Cardano. Let's do optimize. So what does tax loss harvesting mean? Now, again, it's basically too late if you're watching this video right now because tax loss harvesting is done, typically speaking, around the December timeframe. If you're watching this video now, it'll be pointless to harvest your tax because we're in the beginning of the new tax year. So again, this will apply in December 2022 if you want to do tax loss harvesting. So what does tax loss harvesting mean? Meaning tax loss harvesting, let's just say that the crypto market dumped in December, which we did back in December. And let's just say you want to sell that crypto at a loss and then buy back in at the same price. So you would trigger capital gains tax loss. So essentially speaking, you would negate a lot of your gains you made in the beginning of the year. So let's say that crypto skyrocketed, towards most of the year, and then it dumped in December, but you still have a little bit of gain. So you could easily sell that crypto in December at a capital gains realized tax loss, and then buy back in at the same price. So in that way, you realize a loss, which that realized loss can in turn reduce your capital taxable event. So let's take a look here at Cardano to see if I would have had any tax loss harvesting when it comes to selling my Cardano. So as you guys can see here, I have a $9,000 tax harvesting loss for Cardano here. So in December 30, let's say 31st, 30th, like sometime in December, I could have sold roughly $12,000 worth of Cardano. Let's see $12,000 worth of Cardano, and then rebuy back in. Now again, you're gonna trigger some fees. If you do this in Coinbase, you're gonna trigger some fees. But if you have the swaps for Celsius Network, you get to do this for free, guys. So you can actually tax loss harvest for Celsius Network if you have the swaps for free. So technically speaking, back in December, I could have sold roughly $12,000 worth of Cardano and then buy back in. So essentially sell Cardano for, let's say, USDC, and then take that USDC back to Cardano. So for Celsius Network, you pay 0 fees. That's very good. And you get to tax harvest. Essentially, I could have reduced my capital gains tax by $9,000. So that would have been very awesome for me. Unfortunately for me, I don't have the swaps for Celsius Network, so I wasn't able to avail of that. So let's take a look at my taxes here. If I would have done that, I decided not to do it. I could have, if I had the conviction of tax loss harvesting for my 2021 taxes, I could have reduced my gains here. So I have $28,000 of long-term capital gains. If I would have tax harvested back in December, again, hindsight 2020, I should have done that, but I didn't. I could have reduced this. So technically speaking, 28,000 of capital gains, I could have reduced by $9,000 capital loss short term. Again, that would have saved me a lot of money, probably thousands of dollars. But again, it was a big mistake by me. I didn't tax loss harvest. It's too late now. I can't do it in January. It's too late. I should have done it, but I didn't do it. Okay. Now that is tax loss harvesting, is you get to sell crypto, then buy back in, because in most traditional markets, it's actually illegal to do that. If you were to do it in stocks, if you were to do it in money market accounts, that is illegal to do that. But just the fact that cryptocurrencies are treated like property, you can do that. It's allowed. Now again, definitely consult your tax advisor, your tax accountant before you're doing stuff like that. I am not your tax advisor, your tax accountant. Definitely consult them on that one. All right. Again, the tax form is not available yet for 2021, but if you guys can see here in 2020, I use TaxBit. You download an IRS 8949 and also an income report. Again, these taxes are different. Long-term capital gains are taxed at 0, 15, or 20%. Short-term capital gains are taxed like income. So depending on your income bracket, it can range from, I believe, 12% all the way up to 37%. That all depends. And also your staking income. So if you make income from BlockFi, from Celsius Network, from Nexo, from Crypto.com, that is taxed as income. Okay. So you pay between 12% and all the way up to 37%, depending on how large your income is. All right. As you guys can see here for 2021, I barely had any capital gains tax loss. I had roughly 28 grand in capital long-term gains and roughly $8,000 of income for 2021. Now let's take a look at some DeFi implications. Again, so for most of you that don't have DeFi transactions, you don't have to worry about this. But if you do have DeFi transactions, you definitely have to consider these implications. Okay, number one is going to be wrapping your Bitcoin or any events where let's say you wrap your Ethereum for synthetic ETH, things like that. So basically you're essentially taking one asset and using the derivative version of that asset. So one example is going to be taking your Bitcoin and buying wrapped Bitcoin. So essentially wrapped Bitcoin is the synthetic version of Bitcoin. In order for you to use your Bitcoin to play around in the DeFi space, make a yield and things like that. So most people in the taxing world, again, some people may think otherwise. Most people believe that taking your Bitcoin and wrapping it is a taxable event. So essentially speaking, let's just say your cost basis is 5K, and let's say you bought one Bitcoin at 5K and it were to rally to 20K. So generally speaking, if you were to take that 20K worth of Bitcoin and then buy a wrapped Bitcoin, it should be roughly at the same price, 20K, you would trigger a $15,000 capital gains tax. So essentially speaking, in your head, you know, doing the transaction trading from Bitcoin to wrap Bitcoin, it's not a taxable event, but it actually is. So essentially, it could be bad for you if you follow the philosophy where wrap Bitcoin is a taxable event. So essentially speaking, if you were to take your Bitcoin and move it to wrap Bitcoin, you would trigger a $15,000 taxable event, given that example. Now again, there are a lot of people out there, a lot of tax accountants that don't believe it's a taxable event. So definitely consult your own accountant to see which philosophies that they that they would take on this one. Now, again, personally speaking, for me, I don't see this as a taxable event. Like, given the fact that I believe that Bitcoin and wrapped Bitcoin is essentially the same, and wrapped Bitcoin is a synthetic version of wrapped Bitcoin, I would argue, personally speaking, for me, especially if you've had a lot of transactions where you take your Bitcoin to wrap Bitcoin, you take your Ethereum to synthetic ETH. Personally speaking, for me, again, not tax advice, I would argue that this is not a taxable event. So if I were to do this for my books, I would not treat this as a taxable event, just because it just doesn't make sense for me. I would not treat this as a taxable event. So that's number one. Again, consult your own tax advisor. Okay, number two is going to be airdrops. So airdrops, there's two different forms of taxes for airdrops. Number one is going to be income. Number two is going to be capital gains. Okay, let's just say, I'll give you an example. Let's just say you get an airdrop on November of 2021. Let's just say you got a $10,000 airdrop and you decide to hodl it. Okay, let's just say you hodl your airdrop. Now, come tax time, the IRS views that airdrop, the 10K of airdrop, as the income. So you would have to pay income on $10,000. Okay, now let's just say you sold that airdrop. Now it depends. Two things to that. Number one, you have a $10,000 of income that you have to report to the IRS to pay income tax on that. And then number two, you have a cost basis of 10K. It went up to 20K. So essentially you have $10,000 of capital gains tax that you have to pay on that. And it's going to be short term, given the fact that it's only less than 1 year that it pumped. So again, it's a very complicated scenario. If you decide not to sell, let's just say you hold a 10K worth of airdrop in November and it dumps to 5K in January, you have an unrealized tax loss. Again, you don't have to pay taxes on that, but you still have to pay income on the 10K. Again, very complicated, but keep that in mind if you have airdrops. Is number one, treat it as income and pay income taxes on that depending on your income tax rate. And then number two, you have to pay capital gains tax or loss depending on if you decide to sell or not. So if you sell it, definitely you will pay capital gains tax or loss. If you hodl it, it's going to be unrealized, and it's just going to be unrealized until you decide to sell it. So definitely keep that in mind. Airdrops, income and capital gains tax, gain or loss there. Okay, so number three, the last and final piece for let's see, is going to be farming. Okay, so for those of you that provided liquidity to, let's say, SushiSwap, things like that, and you provided liquidity to the farm, the income that you receive from the farm is going to be taxed based on income tax rates. Okay, so let's just say that your income tax rate is roughly 30% effective income tax rate. The income that you receive from the farm is going to be taxed at your ordinary income. So given the fact that your income tax rate is 30%, taking into account your whole salary, let's say a salary from your job, salary from crypto staking, from Celsius Network, and all that stuff, it's going to be taxed on your effective income tax rate. So even though you've only made little money on your farm, let's just say like you've only made, like, say $5,000 on the farm. Okay, just given the fact that you're a high income earner from your job, you're still going to be taxed at your effective income tax rate on the farm. Okay, so keep that in mind, that you will be taxed on your farming income. Now, what are some other tax implications from the farm? It's going to be, let's see here, let me just show you guys. Okay, so next tax implications on crypto loans. Number one, crypto loans is not a taxable event. So if you took out a loan in Celsius Network, it's not taxable. If you took out a loan on Aave, it's not taxable. And also, the interest that you pay on your loans is actually a tax reduction. So let's just say you paid $1,000 worth of interest on your crypto. You can actually use that to reduce your taxable income. Now, again, I would only do this if you have an LLC. So personally speaking, for me, I open an LLC for my Celsius account. So I emailed corporate at Celsius.network. I opened an LLC, put my personal accounts, transferred it to the LLC. So now from now on, again, this is fairly new, so I can't really do it for 2021, but for 2022, I could do this. So essentially, any interest that I pay for Celsius Network, I can reduce that interest to reduce my taxable income. Okay, so that is going to be one benefit of the interest expense. Okay, so next up, we talk about forced liquidation. So let's just say you were an Aave or a Celsius Network and you weren't able to provide liquidity. Number one, you're going to be forced liquidated, and that's going to be triggering a capital gains tax. So that could be gain or loss, depending if you trigger that crypto and your cost base is really low. That could be a loss or it could be a gain. That's going to be a forced triggering, so you would trigger capital gains tax on that one. And also, if you have, let's say you provided collateral to a platform and you pay that back and they give it to you in a different form of collateral, then that's going to be triggering a capital gains event, where that could be a loss or a gain depending on the value of the crypto at the time. Again, these are very complicated transactions. I just want to give you guys a general high-level idea, especially if you have DeFi transactions. I would not personally trust TaxBit with regards to my DeFi transactions. I would rather do that manually, calculate that manually. Now, again, consult your tax advisor when it comes to that. But for most of you that are watching this video that don't have any DeFi transactions, you know, like maybe you've only bought crypto in Coinbase, Celsius Network, Crypto.com, BlockFi, and you never really touch Uniswap, you never really touch any other DeFi platform, like you never really got an airdrop, then you don't have to worry about this. All you got to do is plug in all of your transactions via API, and it's going to automatically populate it in TaxBit. You just hit sync transaction, and then boom, there you go. And then come January 11th, which is in a few days, I can print out my tax forms, and I send those tax forms to my accountant, and I am good to go. Then my accountant will calculate how much money I have to pay in taxes, and that's all I have to do. So again, I would definitely appreciate it if you guys use my TaxBit link down below. You get 10% off any of these plans here. Now, again, I don't really see the need for this $500 per year worth of tax optimizing. I don't really need a CPA review. I mean, that is not needed. That's a waste of my time, okay? So this is going to be the best bet for me for my portfolio, $175 per year. Again, you get 10% off if you use my link down below, and I will greatly appreciate that. All right, guys, so that's going to be it for me. I hope you enjoyed the video. Subscribe to my channel if you haven't already, and also like the video for the YouTube algorithm. I'll see you guys next time.